Homeowners are pouncing on the tiniest drop in interest rates. Hi, my name is Kevin Retcher. I am the owner of First Meridian Mortgage, and today is an exciting day, 10/9/2025. 29 years ago, on 10/9/1996, I opened First Meridian's doors to our first clients. That's right, we've been in business for 29 years, almost 3 decades. It's incredible to think that I've been in business self-employed that long. Most businesses don't last a year or two, but we're going strong after 29 years. So I humbly want to thank all my realtor partners and all my clients that have made that possible. To all the clients that have been doing no cost refis since 1996. Here's the thing, we're coming into another small refinance opportunity at no cost for a lot of people. And that's where the Wall Street Journal is talking about homeowners are pouncing on the tiniest drop in interest rates. If you blink, just like in this article, boom, your rates can go up and you can miss an opportunity. So right now, we had an opportunity a year ago where we reached 5999 on no cost refis, and then we went up, and now we're coming back down. So I just want to go over some quick math for you to think about. So here is part of a calculator that I have that shows how a tiny difference in interest rate can make a huge difference in your life. So let's go through, let's just say you saved 3/8 in rate from when you purchased back in 1/1 of 2024. Your current balance would be 588 if you could do a no-cost refi. So we're making the assumption that you can get a credit from the lender that covers all your closing costs for an interest rate at 6 3/8. Right now we're currently lower than that, but I'm going to do that in the next step. Okay, so here at 588 with 6 3/8 as the interest rate, you would save $223 per month cash flow. Now, some people say, oh, Kevin, I don't want to refinance because I don't want to go backwards. Great. You never go backwards. It's what you do with that $223 that may or may not cause you to go backwards, but you actually never will. Here's the thing. You want to keep your payment time frame on the same basis. You can pay $84 of the $223 on the new mortgage. You pay $84 of the $223. You pay off the exact same time frame. So you can put that other $150 roughly in your pocket, and you'll still pay off the very same exact month, so you'll never go backwards. So that dispels this I go backwards philosophy. Next, if you want to be super smart and pay the $223 difference on the mortgage, you now will pay off in 307 months, not 338 that you're going to keep paying on your current mortgage. You'd pay off 31 months earlier, plus save the interest on top of that. So it's hundreds of thousands of dollars when you look at it from that perspective. Let's say you get 6 1/8. I just locked somebody 30 minutes ago at 6 1/8. It would be $319 difference per month savings. They paid that on the mortgage. 290 months they'd pay that loan off versus 338. That would save them 48 months, almost 4 years of payments, plus the interest on top of that. So the tiniest drops in interest rates, doing a no-cost refinance is the way to go. Some people say, oh, well, will rates go lower? Who cares? You can do another one after 6 months. Keep notching yourself down every opportunity you get, saving your family hundreds of thousands of dollars over the life of the loan, based upon what you originally were going to pay for a mortgage over 30 years. So save that money every chance you get. Wall Street Journal goes on to say average interest rates are around 6.33%, nationally averaged, 5.64 on 15-year money. Some of the government reports with the furloughs have not been coming out. They are bringing back some of those employees per the Wall Street Journal, so we can get some of these reports out, so we can keep the data and mortgage markets moving forward. Fed meets at the end of October. Remember what happened a year ago and what happened last month. If the Fed cuts rates, generally speaking, rates will move up. In anticipation of that, rates are usually the lowest right before the Fed meeting. Right now, they're predicting over a 90% chance of a Fed cut in October. So if you're looking to actually do a refinance, I would venture to say that the rates are going to be the lowest between now and that about the 25th range of October. That's about as far out as we can predict at this point. We don't know what's going to happen with the Fed and how the furloughs and the lack of data may impact interest rates. In closing, I just want to thank you again for the 29 years of continued support. And I am extremely excited to know that 1 year from now, I'll be able to say that we've been in business for 3 decades serving you. If you have any mortgage, insurance, real estate related questions, give us a call. Humbly want to say thank you to Michelle, my wife, and Beth, who's been my processor for over 20 years. Without the two of you, none of this would be possible. Talk to you soon.